Happy Tuesday evening. I'm Jeremy Andrus, CEO of Traeger Grills and chair of the Silicon Slopes Economic Impact Committee. Welcome. Thanks for joining us. This is actually our 10th in the SMB series. We're going to be covering the topic PPP Forgiveness. We're going to do an update and Q&A. Boy, this has been quite a journey. It's hard to believe that COVID is only a few months old. We've covered a lot of ground since then. The SMB series is intended to go deep, to get tactical, to answer questions. The PPP forgiveness, application of forgiveness has certainly been some of the most popular, well-attended, and it's been an evolving topic. So we're excited to cover that this evening. I want to start by saying thank you to the panel. I'm going to make some quick introductions, and then we'll get into business. First of all, Stephen Brown. You'll recognize Stephen. Stephen has participated as a moderator on multiple occasions, and we are incredibly grateful for the work that Stephen has done. Stephen's a co-founder and CEO of Ledger Gurus, who provides outsourced accounting services to other businesses, empowering them to build with better numbers. Stephen has done some great work helping us understand the PPP program. We've got Megan Bronson. Megan, thank you for joining us. Megan is a CPA and an advisory partner at Squire. She has almost 15 years experience working with businesses across several industries, specializing in QuickBooks consulting and outsourced accounting services for manufacturing and distribution clients. Megan enjoys sports, music, and spending time with her family, residing in Spanish Fork, Utah. Thanks for being here, Megan. And lastly, Jason Wild. Jason is a founder and managing partner of DLW Consultants, a small business tax and accounting consulting firm. He's also the founder of American Benefits Company, which serves over 200 small to medium-sized businesses across the country with HR, payroll, insurance, and employee benefits needs. Jason's a CPA, receiving his Master's of Accountancy from Brigham Young University. Jason, thanks for being here. And boy, Stephen, you're the star of the show. I will turn it over to you.
All right, so today we want to talk about the PPP Flexibility Act, and we're going to really focus this on more of a question and answer format, because there's a lot of questions people have. We want to help them, and we've got a lot of questions that were submitted beforehand, so we're going to try and take things through in a structured fashion. Before we dive in, I want to just real quickly go through the Flexibility Act, which was passed almost a month ago. Maybe it was a month ago. And this changed things. Unfortunately, for those businesses that spent a lot of money, they're going to, they probably feel envious of this act. But essentially, they extended the use of funds from 8 weeks to 24 weeks. They decreased the requirement for funds that needed to be applied to payroll from 75% to 60%. They added the deferment of payroll taxes for those who received loan forgiveness, gave an extension of rehiring to the end of the year, gave some leeway on the safe harbor for the loan forgiveness, including the inability to rehire an individual who's an employee of February 15th, and some of these other scenarios. And they increased the minimum loan maturity to 5 years. So significant changes that really provide a lot more flexibility, for the name of the act, to how those funds can be used. I think the biggest challenge that we've seen in the accounting profession is that a lot of people who got their loans early on were spending fast and furiously so that they could maximize their forgiveness. We'll talk a little bit about that and what those implications are. The forgiveness spending period has obviously extended. So you now have the ability to end that after 24 weeks or December 31st. If you did get a loan before June 5th and you wanted to take the 8-week covered period, you still have that option. So you could just move on. And there are some alternative periods that are based on how you calculate that. So if you have a payroll that is biweekly, as in every other week or more frequent, you have the ability to adjust that. Now I want to dive into the Q&A. Now that we've got a basic framework, what we're going to try and do is take different blocks of conversation and just spend probably 10 minutes, 15 minutes max on these sections. I'll give a heads up on what we're going to cover. So if you have questions on YouTube, we've got some people covering those. We're going to go over some of the questions that came in advance, and we'll try and insert those additional questions. So to start, what I'd like to talk about is just the general application process and the timeline that we've discussed. One of the questions, first questions is, what documents and what forms do I need to submit to apply for forgiveness? Why don't we start with Megan? Why don't you kind of hit that one real quick?
Yeah, sure. So with the application timing, every lender is going to be a little different. So you will want to make sure you go through your lenders, like what are their lists of things to submit. But for the most part, they're saying you're going to need to submit payroll reports and payroll tax filings proving that you turned around and paid those taxes, payroll taxes associated with it. They're going to ask for support for any of your non-payroll costs, such as your lease payments and, proof of payment on those things. And then they're also going to ask, for any support on your head counts. So if you have any headcount analysis that's applicable, then you're going to be able to show them how you got that headcount. There's going to be more things that go into your calculation for forgiveness, and you don't necessarily have to turn it all in. I would just give them the minimum that they ask for, and we hope that the banks are going to have an attitude of forgiveness here, because that's the point of this whole program. And so if we can get the banks the minimum they need, and then just have everything else on hand that went into your calculations, then I think we'll be good. I think the banks will be pretty lenient on having to see every little tiny withdrawal from your bank account or anything like that. Like, I don't think they're going to be too strict.
Awesome. Key deadlines, Jason, what are the dates? We talked about a couple of dates, but what are the key dates that you would say a business owner should be paying attention to?
The date that they received the loan is a key date. You want to make sure that you know when you actually got it, and that's when your forgiveness period, that's when the covered period started. Also payroll dates, like Stephen, you alluded to those alternative periods. So you want to see if you fall into one of those based on when your first payroll was after you got the funds, especially if you're going to be using all payroll for that. And then December 31st, if you do get a loan, in the next few months, which who knows if there will still be funds or not, or how long we'll have funds. But it does need to be used by December 31st or within that 24-week period, whichever of those is shorter. I guess I would say those are kind of the main dates.
Let's talk about one thing, real clarification. So my understanding is today was the last day to apply for a Paycheck Protection Program loan. Have we seen any? I haven't seen any changes that are extending that. Has Jason or Megan, have you guys seen any changes, or today it's over, right?
It's over. Today was the last day for the lenders to submit to the SBA even. So I saw a lot of them cutting off Friday, Saturday, probably Sunday too. But yeah, if you have not applied, it is too late.
Yeah, and obviously the banks have gotten a lot quicker. But so if you apply today, even if you don't get the funds for a month from now, right? But I mean, you're likely it's not going to take that long anymore with how quickly the lenders are moving. So
The last few weeks, we've seen very little movement on the loans. Now, as I was reading on this, you got 24 weeks that you could use as a max covered period. And then my understanding is you have 10 months after that for which you can apply for forgiveness. Is that correct?
that's my understanding. Yep.
Okay. Megan, anything to add there?
You do. You have the 10 months. So the good thing about that is it doesn't matter whether you choose the 8 or the 24 week, you still have the 10 months from your covered period ending. And so even if you use the 8 weeks, you still have plenty of time to get around to applying. And if you don't do it, then they're assuming you're paying it back. I assume that some of the banks will be pretty proactive because they'd rather get the loan paid in full by the SBA than wait on you for 5 years to pay it back. But that is, I mean, if you don't, they assume you aren't asking for forgiveness. So.
Yeah, and I've had a couple clients who are like, "Hey, I just hit my 8 weeks. Do I need to hurry and apply?" So I think that's a really great part to clarify. You have 10 months from the end of the covered period. So there's no, I mean, obviously, might as well get it forgiven as quickly as you can, right? But no, they're not going to, if you apply a month from now, they're not going to say, sorry, can't have it forgiven.
The other thing, I see a lot of small businesses that are stressing out about a loan, stressing out, some of them never had a loan, stressing out about the payments. They've changed the payment deferment period as well. Let's just talk through that real quick. Megan, do you want to talk a little bit about the changes to the payment deferment?
Actually, it's good to bring up because it's important to know that a lot of people who've received it signed a loan doc saying, I'll be deferred for 6 to 12 months, and then I have 2 years to pay it off. So you're with the extension to be 5 years that we talked about as part of the Flexibility Act. New loans will all say that in the loan docs, but if you already had yours, you actually do need to work that out with your bank if you're not receiving full forgiveness. So forgiveness happens. They say some of the banks have already stated it's going to be a 6-month delay. Others have stated 12 months. Others are still leaving that 6 to 12. And the point is that when you determine your forgiveness portion, you will then decide the repayment terms, amounts and dates and everything. But the deferment has been extended. I want to say it's a full 2 years before you pay anything, but I don't know that off the top of my head. But the full loan won't have to be fully paid until 5 years.
But to your point, if you got one of the early loans, they were under other terms, you probably want to start having that conversation with your bank to the point the forgiveness is going to go through the bank that you worked with. So you start talking to your bank about the forgiveness process, understanding how to change the terms if you need to, what their, the deferment adjustments will be for them, and just get those things lined up.
And guys, it's my understanding that the bank isn't required to change that. Is that right? Or it's up to the bank's discretion still, right? Whether or not they want to extend that deferment period. I mean, I'm assuming most of them will work with everyone, right? But I guess technically they don't have to. Is that right?
That's how I read it, is that it is up to you and the bank to decide what you actually do with it. And I think that they're saying that, one, for, to keep it simple, and two, the likelihood that you're just going to be forgiven and it doesn't even apply is so high, that they're going to sit there and make everyone make a decision today. You don't need to run over and get your bank to change your loan docs today. Just wait until forgiveness and make sure that's part of the thing on your checklist, that the repayment terms, and negotiate to get them the 5 years if you can.
Yeah, I saw some questions around, hey, with the 24-week period, does this change the amount of the loan? No, it's still a 2.5 month or 10-week calculation. What they've essentially done was adjusted how long it takes to burn that down. A lot of businesses and a lot of customers I was working with were trying to do unnatural things to maximize forgiveness. And I told them, originally I said, hold off, don't do all those unnatural things till the end, let's see what happens. Well, fortunately, by the end of the initial 8-week period, we had the Flexibility Act. And so as a general guidance, it's like, you know, normal payroll for most businesses over 24 weeks should accumulate to 10 weeks of you know, your 12-month calculation. There is obviously some exceptions for businesses that were extremely affected, but I would say for my guess is 70–80% of the companies that got PPP loans should be able to consume that with payroll alone over a 24-week period. Some other kind of quick hitting questions. Jason, do I need to fill out a form to take the 24-week period if my loan was done before June 5th?
Simple answer, no. You can choose which covered period you want to use when you apply for the forgiveness. And since you have that 10-month time frame, it's like we said earlier, you don't have to rush to tell anyone that you want to use the 24 weeks versus the 8 right now. So
another question that I've seen a lot is, you know, a lot of businesses, if they got to some level of normalcy, and there's some nuances here. Let's say they consume 100% of their loan on week 10 or week 12. Can they apply for forgiveness early, and what are the implications there? Megan, why don't you let's talk through this for a minute, because this is an interesting question that a lot of people are going to have.
For sure. I mean, this was something that I was like 8 versus 24. That's a big gap, and there's a lot of uncertainty that comes with it, right? So I have a client who they were like on the verge with their 8 weeks, and as they analyze their money, they were able to keep their people hired, which is why at the end of the 8 weeks they pretty much had spent almost all of it. And then, you know, they're in the construction industry, so work kind of started drying up, and they're uncertain about the future, and they're worried. They're saying, well, if I choose 24 weeks instead of 8 weeks, I don't know what's going to happen over the next 4 months, right? And I'm not sure I can have my people still working for me, and so I'm worried about the FTE requirements, and so we were worried about this 8 versus 24, and the guidance last week was that you can apply for forgiveness when you've exhausted the funds. And so if you on week 9 or 10 or 20 exhaust the funds, you are able to apply for forgiveness. Then you can always wait the 24 weeks if you want, but you can get the forgiveness application as of week 10 or 12 or 20, whatever applies to you, whatever makes most sense. And so the two, I mean, one is the spending of the money, right? So the spending of the money is important because you've probably been using the funds to cover your full payroll run when really the employer taxes aren't forgivable. And so, or maybe you've used it for the full mortgage payment on your office space, but only the interest portion is actually forgivable. So you may have to go beyond your actual funds getting exhausted to get to the right date. But the spending is going to happen. And like we've talked about earlier, you still have 10 months. You still have 10 months to figure this out. And so it's going to take a little bit of creativity, I think, to kind of analyze at what point in time did I meet the spending requirements and have a good situation from a headcount standpoint, because the headcount is where the uncertainty comes in. And so there are some more safe harbor things there, which is great. We can talk through those probably as part of another question. But you are going to be able to get to the right timing for you. And we still have 10 months to figure it all out, which is awesome. Well, actually more, more like 14 months from now, right? To figure it all out. So
here's a question and let's talk about that safe harbor and layoffs, and we'll get to that later in the conversation. There's a good one that came up in one of the pre-submissions around government crackdowns on companies that have not had financial hardship but still receive the money. And should I be worried there was a safe harbor date to return the money? And this was a big deal a couple of weeks ago. It looks like it still lingers on people's minds. Let me outline my understanding, and then maybe Jason and then Megan, you guys can comment. As I was going through this with some of our clients and reading the documents, there was a lot of, it became really political. So there was what was being said in the media and on Twitter and social media about what was going on, and then there was the reality in the documents. And my understanding, as I interpreted the documents, was you basically had to certify that economic uncertainty necessitated the loan. It was a very ambiguous statement. They never really changed that. They then clarified that there could be a review of the loan, and if you were deemed ineligible, you would have to return the balance, but you would not be liable for criminal penalties. And they've also, because of the loan application, there's a clear statement, and they've signaled that they're really going to be looking at larger loans, larger than $2 million. So the guidance that I gave to my clients was, do you have economic uncertainty of any type? Supply chain slowdown, loss of revenue, you just go down the list, and if you can document that, you're probably okay keeping the loan, especially if it's under $2 million. Jason, what are your thoughts on, should people be worried about taking a loan for which they might not have been eligible for?
I think you hit the nail on the head with that very first statement that you attested to on the application, which was that the current economic situation, the current economic uncertainty made it necessary for you to get the funds. I mean, in my mind, as I went through and talked to several of our clients, and pretty much everyone on our client list that I could think of, I don't know who that wouldn't apply to. I mean, the way that businesses were being shut down across the board in a lot of cases, or people being required to stay home, and also, us not understanding the virus itself and how bad it could get. I mean, I think just about everyone who owns a business experienced that economic uncertainty, So I think it would be really difficult for anyone to not check that first box. And like you said, I mean, I didn't personally have any clients who got $2 million or more. And I would assume that, I don't know, I know you guys have some stats. Do you have the stats on how many of the loans were 2 million or more? I mean, I guess it doesn't necessarily matter unless someone listening got one, but
it was a significant large number, but like you, I didn't have any that were that large. And I've read some stuff that said the likelihood of the SBA able to go even to audit all of the $2 million and above loans is really low.
Right.
So
yeah, the SBA doesn't have the staff. I mean, the SBA never planned on having to head up this program, right? So for them to even try to hire enough staff to audit all of those, yeah, I wouldn't be worried about it if it were me, I guess, short answer.
Megan, anything you'd like to add on this topic?
Yeah, the only other, I mean, the reason for that was for the big companies who could have as easily done a capital call as ask for government money. And so they were trying to get the money to small businesses, to the employees, and those who had easy accessible funding were supposed to and encouraged to exhaust those funds first. And that was where it all stemmed from, right? And so that's one thing to understand, is that this was not supposed to affect the small businesses at all, because they were, if you as a small business receive the money, that was the intention of the program in the first place, so you should get the money. For the other point that to bring up is that they don't expect you to have had hindsight, right? So like you talked about, all the economic uncertainty totally applies. I mean, everyone still is uncertain about what's going on. And even if you have been lucky enough to not have revenues drop and your workforce has still all been there and you haven't had to shut down for 5 days because somebody got, a positive COVID test, even if you haven't had those things, you have the uncertainty that could still happen tomorrow. I mean, it's still there. And if in hindsight, 10 months later, when you go apply, you realize, oh, I didn't really actually have a problem. They're not trying to ding everyone for that. They tried to get the money out. You attested that you had uncertainty and you'll be fine, in my opinion, like you both have said as well.
Bottom line, most of us on this call shouldn't have to worry. There were a few questions that were submitted around the implications of also receiving an EIDL, Economic Injury Disaster Loan, which is back, that would kind of disappeared and it's come back. And what are those implications and what do people have to worry about? Megan, let's stay with you. EIDL and PPP. Like what do people that got both of those loans, or if somebody wants to also get an EIDL on top of the PPP, what do they have to worry about with those two having both loans?
One with the EIDL loan is a broader spending purpose than just payroll. And so one of the actually things that have come about is people applied for the PPP loan and they applied for the EIDL loan. Sometimes the EIDL loan happened first and they said, we need this money. And then they applied for the PPP and got the money for payroll, but yet their EIDL loan also had that kind of in their dollars that they expected to receive. And so there is not a either or out there. You can have both. But I do think that there's going to be a little bit of aftermath. There's going to be some adjustments to some of those EIDL loans, because if you turn around and use that money for non-payroll costs and non-operating costs, because you had all this extra money all of a sudden, you decide to buy a boat, there could be some implications there on both sides, actually both the PPP side and the EIDL side. So if you have both, I guess I would be holding on a little bit to the EIDL for a few more months if you can. I mean, if you need it for operating, then you need it. But if you got a loan for PPP and EIDL loan both at the same time, I would be a little bit hesitant, because I think they're going to go back and kind of roll through and realize that the EIDL loan maybe shouldn't have been as big. And so anyway, there is still a lot of unknown there. And, but I do have a few clients who are probably in that situation where they got too big of an EIDL loan because of the PPP funding that finally did come through.
All right, I want to drill down on some of the specifics around.
Hey, Stephen, can I jump in on that real fast?
Yeah, go ahead.
So I do think a distinction needs to be made between the EIDL advance and the EIDL loan. I think some people when people talk about the EIDL loan, a lot of times they're talking about that advance that's forgivable, right? And so it's my understanding, because you were pretty really early on, you could apply for up to $10,000 of that EIDL advance that was forgivable, $1,000 per employee. And it's my understanding that will directly reduce the amount of the PPP loan that's forgiven. So if you got a $5,000 EIDL advance that's forgivable and a $25,000 PPP loan, then they're only going to forgive $20,000 of the PPP loan and $5,000 of the EIDL, not both. Is that correct? That's my understanding on the EIDL advance versus the actual loan that then later was funded.
Yeah, that's my understanding as well, is that the advance, and I'm glad you noted that the advance will reduce your PPP forgiveness, because you weren't supposed to be forgiven for all of it, even though that was really misleading. I mean, from the beginning, you think it's both, but it's not. But thankfully it's just the, up to 10 grand that's not. And then that would be part of a repayment plan on the PPP side.
All right, before we dive into some of the specifics around the forgiveness calculations and how it applies to payroll, I want to take a slight detour and talk about tax implications. There was a number of questions around taxes, and sadly, I don't feel like they were addressed in the Flexibility Act. So one of the questions, and this is, what are the tax ramifications of PPP loans and forgivable expenses? Jason, why don't we start with you?
Yeah, it's my understanding that as of right now, well, one thing to note is either way, you do have to pay the payroll taxes, the Social Security and Medicare on the money, because you either have to put it on your Schedule C. If you're an independent contractor, you're going to have to show that you made that much money to have it be forgiven. That's my take on it. On your Schedule C, when you file your taxes, which you'll pay self-employment taxes on, or you had to pay it out in payroll and pay the payroll taxes on that. But then also, it's my understanding that the expenses that you incur with the PPP funds will not be tax deductible. And everything I've been reading, has been saying that they're optimistic that will change. I'm really hoping it changes, because I'm going to hate to go to all my tax clients in March and say, oh, by the way, that $100,000 of payroll that you paid out is, you're not getting a tax deduction for it, because it essentially just makes these funds taxable. It's not taxable income per se, but you don't get to deduct the expenses that you would have spent anyway. So they're essentially taxable. I actually also have read a couple interesting legal opinions saying that, in their opinion, if it went to tax court, the IRS would lose in saying that these aren't tax deductible, because bankruptcy loans that are later forgiven in bankruptcy, they don't have to go back and amend those tax returns and make those expenses non-deductible. I thought that was kind of interesting, because right now, when people are spending this money, they don't know 100% whether this is going to be forgiven or not, right? So I thought that was an interesting take. I don't know. I'm hoping that the IRS will come out and just allow everybody to deduct these expenses. But as of right now, they're not deductible. So my understanding.
Megan, anything to add on that point?
Yeah, I wanted to add, because Jason's right. They are right now not deductible, but can you imagine, feel me for a second as an accountant. Can you imagine when we're trying to file 2020's tax return next year, that if we have 10 months to apply for forgiveness, and then we don't even know, the bank then has like 60 days to actually process the forgiveness application. We don't even know whether they're forgivable or not until the early, it could happen a lot earlier, but it could be still December 31st of 2021 that we even find out, oh, your 2020 forgiveness happened. We shouldn't have deducted all these costs. Like, how are we supposed to handle that? So I have also heard that it's optimistic that AICPA is really pushing and optimistic that we'll be able to get those things deductible. And because essentially because it's not deductible expenses, it is a taxable forgiveness. And I don't think that's the intention, but they have not addressed that. They have not fixed that right now. And so right now, whatever you're forgiven for is also taken away from your deductions.
And there was a question that kind of illuminated a point you just made there, Megan, that with that 10-month window of forgiveness, but next year's tax deadline for businesses, March 15th, for individuals, April 15th, we could get to a point where you have not even submitted your forgiveness application and you have this open-ended situation. So would it be a good general recommendation, if we're still in an uncertain spot at that point, to opt for an extension and see if things are resolved?
Yeah, I would extend with hopes that they'll resolve that. But I honestly don't think we'll have to wait that long. I really do think for sure, I mean, latest December 31st, they'll get that figured out, and hopefully sooner than that.
I'm hoping they'll just start making the tax deadline July 15th every year from now on. They'll see how this is how it should be all along. I doubt it, but that would be nice.
You're gonna ruin every tax accountant's summer. So, all right, so let's dive in. I know we're getting a lot of questions on related topics. I want to talk specifically around employee payroll. And previously, they had a limit that you calculated to say what were the max amount of payroll costs you could be for an employee on the 8-week program. Now they have a new number that has come. So what are the max? This is kind of one of those softball questions. What is the max amount of forgivable expenses for an employee over a 24-week period? Why don't we take Megan? I'll give you the softball. I know you like to play softball.
I do. Okay, so the with the 24 weeks for employees, it is extended to the full period, full 24 weeks. And so you take 2019, or sorry, you take their payment during the 24 weeks, and then you have to limit them to, it's like $46,000-ish, which would be an annualized 100 grand limit, right? So you're taking that $100,000 divided by 52 times 24. And so every employee is going to be limited to 46,154 is what it is.
So, there was an interesting question of, is there weekly limits they have to worry about, or is it just the amount over that covered period?
It's the amount over the covered period. What we don't know though is if you say, hey, I've met all my expenses at week 12, do you have to do a 12-week annualization? And my guess is going to be yes, that's the intention, is that however many weeks you're including in your calculations, you can't just be the 8-week 15,000 or the 24-week 46 grand and give everyone a bonus and said, oh, we spent all the money in 12 weeks. You actually need to, my guess is that they'll have that as an update to the application, is if you file at 16 weeks, there'll be 16 weeks worth of 100 grand as your limit. And then it is different though for owners. And so I don't know if that's your next question or not, but it is different. You need to segue there eventually.
Yeah, let's talk about owner payroll. Let's talk about employee payroll first. A couple more questions on that. So this one's kind of related to, this is kind of the threshold. Let's talk a little bit about the 75% versus the 60% and what that means. So Jason, take us through what that change was and what the implication is for businesses that are looking to get forgiveness.
Yeah, originally it was 75% of the loan at least had to be used for payroll. I had a few people ask, does that mean I can only use 75%? The answer is no. You could use 100% of it for payroll. That got changed to 60% with the Flexibility Act. So at least 60% of the loan has to be used on payroll costs. That includes gross wages, certain employee benefits, and state payroll taxes, which would be state unemployment, basically, in this case. So the employer portion of any state unemployment. Yeah, pretty straightforward. 60% of the loan has to be used on that at least, but 100% can be, and you're fine. If you use it all on payroll, and you've already used it all on payroll that's covered, then you're set.
Yeah, and that was one of the questions that we had submitted, and it my opinion is the simpler the documentation for forgiveness, the better. So if you can prove 100% forgiveness with just payroll reports, do it, right?
Yeah, I've talked to a couple of the banks, and they said we are basically going to ask you when you apply for forgiveness, hey, walk us through, like, I know Zion's, when you applied, they had a lot of people just fill out a Word document, just a blank Word document saying, hey, just walk us through where you're getting to your number, tell us how you got to your number. And the banks I've talked to have said they're going to do a similar thing where they're basically going to say, look, you tell us how you got to your number. As long as we think it sounds good, we're going to go with it. So if it were me and you could do 100% payroll, don't muddy the waters, just use as much of it as you can on covered payroll costs if it were me, and make it easy for the bank to forgive it.
On the employee payroll, so let's talk about what happens if somebody, there are going to be certain businesses, restaurants is a good example, where they can't bring back all their employees. And so they're going to struggle to maybe achieve all of that cost with payroll costs alone. What's going to happen if a company does not hit that 60% threshold, Megan?
Yeah, that's been a good one because we've been waiting for that, because there kind of was this fear that there was a cliff mentality going on where if you didn't get that 75% or now 60%, do you lose it all? Like, do you get none of it forgiven? And they have clarified that it'll just be proportional. So let's say, your loan's for $100,000. You should have $60,000 of payroll costs, but if you don't meet the mark, let's say you only have $50,000 of payroll costs, then what they'll do is they'll say, okay, well, then you only get another $30,000 of non-payroll costs on top of that. They're going to take whatever you do have in payroll costs and they'll divide by 0.6, which is really trying to figure out, well, how much would a full loan be or full forgiveness be on 60% of these costs? And and then you have the rest of it to make up non-payroll costs if you have them. And then those two things added together will be what you get forgiven. So anyway, but yeah, 60% of what your costs are. So it doesn't even have to be, with your loan being $100,000, you do have, like, it actually, they don't even care what your loan was for. They're saying, what are you submitting as forgivable costs from a payroll standpoint? Then let's add another 40% to get to the total forgiveness available. But that's all they're really doing, is just making sure you're not, spending $50,000 on lease payments and mortgage interest and utilities and zero on payroll. Yep. And so anyway, but it is whatever proportion. And so
there are a lot of, there were some submissions about some really, unique edge cases around what about this payroll cost? What about this benefit? Let's just reiterate what we know are the payroll costs for the employees. We're going to talk about for the owners separately, but for employees, it's your gross wages, it's your non-federal employer taxes, it is benefit. You're shaking your head, Megan.
Well, I guess you said non-federal. So yeah, you're talking about your SUTA tax, right? Okay. Yeah, you're good.
Your state and your local taxes, you can apply to that calculation. It is, and then you get benefits on, that we talked about that limit. So the limit does not include the benefits. So it's things like 401ks, health insurance premiums paid by the company. What else? What am I missing? Let's just kind of rattle off the things that we know. What are the other benefits that a company could say apply towards forgiveness for payroll costs? Jason.
I'm not 100% sure on that. I would assume obviously anything similar to health insurance that's included, dental, vision, those types of benefits. I would assume group life insurance policy premiums that are paid by the company, unless anyone knows differently on that specific benefit. those are kind of all the ones I can think of.
Megan, any others you would like to add or comment
No,
on?
I mean, they really focus on the health and on the retirement contributions. Employer only, you know, like most employers offer dental and vision, but then that's fully withheld from the employees. And so in those cases, it wouldn't be considered. On the life, I would probably say that might be stretching it. And that's one of those things where we talked about don't muddy the waters if you don't have to, right? There are going to be some banks who probably are like, oh yeah, sounds good, and take it. And other banks will be like, whoop, that wasn't specifically listed. We're not allowing for it. And so I would not throw it in there unless you are absolutely trying to get every single penny that you can. And then it'll be really up to the lender whether they agree with that interpretation or not.
That's some
Yeah,
pretty,
I think that's a great rule of thumb. Just if you have to use it to get to the number you need to, throw it in there as far as employer paid benefits. But if you don't have to use it, then just go with gross wages. You know, gross wages are 100% going to be forgiven. So get as much gross wage as you can.
and this is the argument for taking advantage of the extra time, right? If you're finding that you're, you know, I see a real anxiety in business owners to be like, let's get this loan off our books, but it's like, and they want to rush to get the forgiveness application out, when take an extra payroll period and you might be able to easily achieve it with your gross wages. So to your guys' point, there's not a penalty in taking the extra time. You've got a long time for forgiveness. So if you can maximize, if it takes 24 weeks to have a really clean forgiveness application, you know, do that versus trying to throw all of these edge, costs in that may or may not be interpreted as forgivable, just so you can get the loan off your books early.
Yeah, we have several just, one owner S corps that got the full amount for one employee, and we're just trying to jam everything in and come up with these other costs. And now with this, we're just saying, look, let's just reduce the amount of the salary, that you were, go back to the normal salary, monthly salary or whatever that you were paying yourself. Let's just stretch it out as long as you need to, and make sure that you're getting it forgiven, rather than trying to pay rent. I've seen people, well, I'm going to pay rent to myself to rent my home office and stuff, which, that's a tax strategy for sure, but I don't know if that's going to be forgivable rent. I don't know what they'll say about that. So if you don't have to do that kind of stuff, stretch it out along the 24-week period and just do it the right way.
Let's transition and talk about owner payroll, because a lot has changed. A lot of clarification has come up since the last time we had one of these deep dives. Let's talk about what can be forgiven for owners, and there's a lot of different scenarios. So let's first talk about how that can. Let's talk about maybe LLCs or derivations of those, where an owner is also an employee. Do they have the same? This is another softball. I'm going to give another softball to Megan. This is a very different scenario than it was a couple weeks ago. How much can I apply for forgiveness for an owner employee?
Yeah, so it is different, and it surprised me, but at the same time makes sense. Where if you are an owner employee, so that's like on your C Corp or an S Corp, or if you're an LLC taxed as an S Corp, where you're paying yourself a wage, you are limited to your 2.5 months of 2019 wage. And so basically whatever you got, whatever you received a loan for your portion, you are limited to forgiveness for your portion to that same dollar amount. It's the same calculation, which is why it's makes sense that you shouldn't get to put in your pocket more than you received in the first place. And then if you have employees, though, they're all treated like we've been talking about all along, with the 24 out of 52 weeks. But for your portion, you report separately on the application forms. You are limited to 2.5 months of last year's. No matter, well, it matters what you're paying yourself. If you're paying yourself less than you used to, because you're limited to what you put into payroll. But the cap is at last year's number, last year's 2.5 month number.
Or also 100,000. So like if last year's
Right.
number was a lot more, you still have that threshold. But let's
Yep.
say you gave yourself a big raise in 2020, but your 2019, let's say you paid yourself 60 grand a year in 2019, then you bumped yourself up to 70 grand a year in 2020. It's going to be calculated off of that 2019 calculation, not what you're actually paying yourself in 2020.
Right. And what you received as your loan in the first place was capped at that 100 grand. So you received up to, I think it's 20,833. That number is what you received as funds. And so if you turn around and that's all that you can get forgiven for. The one caveat I'm going to add right here, you might be planning on getting to it later. What about benefits? Do you want to talk benefits?
Let's talk benefits. How do benefits apply for an owner? How can I apply those to the forgiveness?
So yeah, on the owner employee, we actually expected they'd be treated like all other employees, but they're not. If you're an owner employee, they're looking at your 2019 retirement contributions, and you get 2.5 months of that. And so again, that's what you received PPP funds for in the first place. So you're not getting hurt by it. But on the health insurance side, you need to make sure you put that as part of your payroll. As an S Corp owner, from a tax perspective, you are required to put your health insurance portion on your W-2, which means you would have received PPP funds on that W-2 number, supposedly. And so therefore, your health insurance that you're spending in 2020 is part of your salary calculation. That gross wage limit is on your health insurance benefits too. Which is surprising because I don't know if everyone did actually include S Corp medical owner wages in their PPP application. I think that they included them as additional benefits, not as wages. But I don't know if it's kind of a hard one to describe without some bullet points.
Yeah. And again, the nice part about the 24 weeks, I think we're going to come back to that theme. If you can achieve it with some simplicity, the owner calculations, there's a lot of complexity there. You'll still have to specify those out, but you're not going to have to parse, thread the needle to try and get the perfect amount of forgiveness if you can extend that and get it through your employee payroll.
Yeah, I've had several people come to me who, per the guidelines, should not have gotten approved for the amount they got approved for, right? But the bank did it. And so with things like that, with benefit amounts, and so I've basically said, look, you got the money, do it right now, get with your accountant, whoever does your payroll, whatever, do it right with the funds that you got so that they will be forgiven. And yeah, the 24-week thing makes it much easier to do that, as far as, if you got approved based on something that you shouldn't have gotten approved on, my recommendation has been, hey, do it right now, make sure you're doing it the right way from here on out. And if you have to use a longer time period to get that done the right way, then do that.
And they changed the rules, right? Like a lot of these things around owner compensation weren't well clarified in the early days of the application. So people might have thrown some of those into the calculation, and there was safe harbor. Like if your loan were to get reviewed, you could be like, hey, I did it under the assumptions at the time Again, going back to the earlier point, the likelihood that the SBA is going to review your loan to that degree is pretty low. But if you did it with good faith and intent under the rules at the time, they're not going to come after you.
Right. And there's no reason why you can't use that extra money for your employees. Like, that's why we're talking the 24 weeks helps, not necessarily for you as the owner employee, but to be able to get those funds forgiven by spending on all of your other employees. That's where you have that incentive and that benefit of waiting the 24 weeks because they're not as limited.
So I have a good question, and it merits some quoting. Please, please, please have a section that addresses self-employed people with no employees who use Schedule C. Let's talk about Schedule C scenarios where it's a self-employed individual. How does that change the payroll calculation? Jason, you mentioned that. Why don't we start with you?
Yeah. To be honest, I don't know 100%. I don't know if anyone does. Maybe Megan does. Megan seems to know just about everything, but I don't know if anyone knows exactly how they're going to confirm that a self-employed person used the funds for payroll, because I put payroll in air quotes because self-employed people don't run payroll. They just put it on their Schedule C when they file their tax return. So I don't know. I mean, if you are just a single member LLC or an independent contractor, sole proprietor, I'm guessing you're just going to say to the bank, here's what you approved me with. You gave me the amount, that I showed you on the application, and here you go. Now I just kept doing what I was doing. So please forgive it. That's what I'm guessing. I mean, I don't know what else they would do with self-employed sole proprietors. I don't really know how else, unless they went through bank statements or something, but I can't imagine they're going to ask you to submit bank statements with this. I don't know. Megan, can you illuminate?
Well, I think you're right. I mean, I think they're actually the simplest scenario. I think the intention is that they're getting automatic forgiveness. They are limited to that 2.5 months of 2019 self-employed income, which is their Schedule C. Or I think this also applies to those who are on like a 1065 partnership who aren't paying themselves a wage, like you mentioned, but yet they got a portion of PPP loan for themselves based on their 2019 self-employed earnings. And so, I think the intention is that there's just whatever you received is going to be fully forgiven. The only thing is logistics, like you mentioned. Their earlier verbiage was telling me, oh, automatic forgiveness, awesome. We don't have to do anything. But the way it's worded this round, just the last few weeks, I'm a little bit worried that they're going to want to see you actually withdraw money from your business bank account, i.e. saying I received PPP funds and I paid myself. And I don't think that they're going to require that. I think that's kind of ridiculous, because how hard would that be to say, oh yeah, here's my withdrawal. I sent it to my personal funds. And then tomorrow, oh, my business needed money, so I invested back in my business. I mean, that's like we've talked about, there's not a per pay period analysis going on for employees. So we shouldn't have to see some like a monthly amount for self-employed either. I think we're looking at automatic forgiveness for self-employed individuals because it's all based on 2019 anyway. So for them.
Awesome. All right, so let's talk a little bit. Well, on that note, we didn't really talk about the easy form. There is an easy forgiveness application form that was introduced with the Flexibility Act, or shortly after the Flexibility Act was released. Let's talk what that form is and who would want to use that. When and what, kind of what scenarios they'd want to use that. Megan, you had a lot of information on this. Just take us through the easy form, because I think it relates back to self-employed very much.
Yeah. So the easy form is the big difference is that there's not a headcount analysis. If you don't have a problem with headcount, meaning you didn't ever reduce your workforce, you can use the easy form. If you are self-employed with no employees, that means there's no reason for a headcount, so you can just use an easy form. And then there is this new safe harbor where they've said, you know, there's a lot of government restrictions out there of who can open and how many people can be gathering in an area. And there's a lot of safety requirements if you do open. So if you are still unable to open, and they do have it saying through your covered period. So so anyway, they're saying if you do still have an inability to open to your full capacity by the end of your covered period, then you can claim the safe harbor saying, look, I'm not allowed to open. My state is in orange or whatever each state is doing, and I can't open. Then they're not going to hold you accountable for any FTE analysis. It's not a free pass. You do have to show that it's because of government restrictions, not in local CDC area, you know, all kinds of restrictions, not just you. I didn't feel like opening back up until it was all over. You do have to show that those restrictions are in place, but there is a safe harbor. And if you meet that safe harbor, then you don't have to do a headcount analysis, and that makes you eligible for the easy form.
Let's talk about that. There's been a number of questions that have come up. Let's talk about some of there's a couple of calculations that you have to do with the standard application, or you'd have to review to determine if you could use the easy application. And the things that they were looking at really came down to your FTE. Did you reduce the number of employees? And also wages. Did you reduce wages? Let's start with the FTE calculation, or the full-time equivalent calculation. There was a lot of clarification on how that's done. Early on, we weren't sure how that was going to be calculated. Now they have that. Who wants to, this is a big one. This is not a softball. It's more of a fastball. Who wants to describe the FTE calculation in a minute?
The FTE calculation is not one of my current strong suits with this, so I'm gonna defer to Megan.
Okay.
If she's got it.
Yeah. So basically you're going to take the hours paid along the period, whether it's 8, 12, 15, 24 weeks. What's your period that you're analyzing right now? Divide by 40 to see what their FTE or how many divide by number of weeks to see how many hours per week they're working. That gets put into 40 to determine what portion of a full-time equivalent they are. They can never be higher than 1. So if their average is 45, they're just 1. But if it's under 40, then it's going to be some point, 0.9 or something. So you then add up all your employees. You're at, let's say, 18.2 FTEs right now. And then you're going to take a comparative period, which you have a few options. One option is January and February of 2020. Another option is, I think, February to June of last year of 19. And then your third option is if you're seasonal. So maybe this is a high time seasonal or even a low time seasonal. You do a comparative period a year ago that spans across 12 weeks. You pick the 12 weeks from a year ago. And so you compare to that period, and let's say that comparative period was 20 FTEs. So you earlier were 20, now you're 18.2. And so they're going to say, okay, we'll take that difference. There are some exceptions. Let's say you tried to hire somebody left and you couldn't replace them, or you shut down for COVID, and when you went to rehire them, they said, no, I'm not interested. And so you have to have that in writing. But if you couldn't rehire or replace somebody, then you get a pass on that person. So now the person who was 20 before, you get to take them out, and they were now 19 before, and you're 19 versus your 18.2. And so you figure out what it is, you take care of your exceptions, and then whatever you're left with, if there's a reduction, then you take your total payroll costs. Let's say you had 90%, you take of FTE, you take your total payroll cost times 90%. And that is a limitation on your loan amount. So we've talked about the 24 weeks being a benefit. Well, if you can take your 24 weeks and say, oh, I have $500,000 of costs, taking 90% of 500 grand, still get you $450,000 of costs. And your loan might only be 250 grand. And so it could be that the FTE reduction doesn't even affect you because of the 24 weeks.
Okay. This was when I went through this. I went through this early on, kind of doing some preliminary calculations. There's a couple of observations I had here. First was, with the multiple reference periods, it makes sense to calculate them and find the best reference period for you. Would you agree with that, Megan?
Absolutely.
And so and I think this is where it gets pretty hairy, right? You've got a lot of calculations. If you've got part-time employees, you're having to do that full-time equivalence calculation based on hours worked divided by 40 and looking at that reference period of weeks. And the funny thing is, I don't know if you noticed this, the reference periods are different lengths, right? So the normalization, if you're not good with algebra, definitely going to want to get an accountant or get somebody who is, because there's some nuances to condense that down to an apples to apples comparison. That was a couple of the observations. Reference periods were different lengths, and based on that, based on where your business was during those periods, you may want to use a different reference period to compare. Especially if you're on the edge. Let's say you're on the edge, you had to let some people go. You may want to find the best reference period to compare to the forgiveness coverage period that you're going to be calculating that full-time equivalence for.
And the only thing that I would add is, if it is affecting you, so if your FTE is reduced and it's affecting your forgiveness portion and reducing how much you're going to be forgiven for, then you have until December 31st to restore that. And so that doesn't matter if your 24 weeks ends in October, you still have December 31st to restore your full-time equivalence there. And so that, around the holidays, if you can get a few extra bodies in the door, you still have to have them on your payroll run on the December 31st in order for there to be like whatever pay period pays that last week of the month, I would assume, is how you'll have to prove it. But if you can say, yeah, I brought my FTEs back up to 20 or back up to wherever I needed to be by December 31st, then that 90% jumps back up to 100% and you're good to go.
Let's drill down on some of the things that you noted. There was a question that came up around if an employee quits, and I'm just going to reiterate what you stated. So essentially, if an employee were to quit or you furloughed and attempted to bring them back and you have it documented, you would essentially be able to reduce the or apply that as that doesn't have to be a penalty to you. So you could put that time back in into the calculation. Is that, just to reiterate, did I reiterate you accurately, Megan?
Yeah, so if you rehire for that position though, you don't take them out. You just kind of say, oh, here's my old person, here's my new person, and it'll all average out anyway. But yeah, if you have a vacant position because you tried to hire them, or they quit, or you fired someone because they were no good, that's okay. You can do those things, and you leave them out of the calculation unless you rehire. If you rehire, you just let it average out.
Yeah, that's Stephen, the documentation part is huge here. I mean, I guess it's like you said, it's hard to imagine how many of these will actually be audited, but more now than ever, if you let someone go because they aren't performing well, document it, document all of the warnings you gave them. It's better to document it with correspondence with them through text or email so that it's something that can be proven was received by them, rather than just a write-up. But even if you can't do that, write it up somewhere in an HR file, make sure you document it. And then also same thing, if you offer them to come back and they don't come back, make sure it's all documented just in case it ever comes up where, you have to prove that you did any of that stuff. They're not gonna, if an audit situation does happen, they're not gonna just take your word for it, or say, well, I tried to hire these 5 people back. Well, do you have texts or emails or anything? Well, no, I just told them, face to face. The likelihood of them tracking those people down and them corroborating your story is really low. So, document really well those situations.
Which is a good practice in general. And I think a lot of small businesses, if you work for a big business before you start your small business, that was my case. These things are pretty normal. Small businesses struggle with them because, they don't have the time, they don't have the resources, they don't have the tools. But it's good general best practices anyways, and maybe use this as an opportunity to up your game as a business in general. The other safe harbor that I want to drill into was the pay reduction safe harbor. So they want to see that you didn't reduce pay more than 25%. Jason, is this one that you want to talk about a little bit? Oh, you're muted.
Oh, sorry. No, again, let's have Megan cover this one.
Okay. Megan, why don't you tee us up on the pay reduction calculation and what they're going to be looking for there?
Yeah, so this is a pay rate analysis. We received further clarification in the last few months on that. So, if there's someone paid over 100 grand in 2019, you don't have to look at them. Like, they're exempt from this analysis entirely.
So if I took somebody who was making 150 and I dropped into 125, you're good.
No one cares. Like, they don't even want them on the list. You could have dropped them down below 100 grand and they still don't want them on the list. It's about that in 2019 where they paid over 100 grand. If so, ignore them. For everyone else, you're looking at what was their wage rate. So you're going to say during Q1 of 2020, what were they paid on an hourly basis? Or what was their annual salary? And so you take what were they paid during Q1, you have to know their hours if they're hourly, and they're going to do a simple total pay divided by hours equals an hourly rate. And that hourly rate is what's going to be compared to what you're paying them now. And if there's a decrease in more than 25%, then whatever that is, beyond 25%, you're going to not be forgiven for that difference. So you do have 25%. Okay. Like, you can drop down to there. And if you go to 30% drop, you only have a 5% difference that you will not be forgiven for. So that will be adjusted on your application. But so it's not like it's 25% triggers the whole thing, it's just the gap. What gap was it to the 25% reduction? And then there is the whole December 31st. If you can prove that, oh, I bumped them back up by December 31st, then this doesn't apply anymore. But this is an analysis on a per employee basis. So it's difficult and it's time consuming, and people who have hundreds of employees are going to have a really horrible time trying to decipher this and figure it out. But I think, I mean, the AICPA has a forgiveness calculator tool out there. We do on our website. And a lot of that is the analysis of their wages to see if they've gone down. And so that is hopefully a little bit of a high level, but with the December 31st safe harbor there, you can hopefully not be affected by it anyway.
Let's transition again and talk a little bit about non-payroll expenses. Obviously, with the 24-week, that may not be a big issue for some businesses, but for some that are struggling to get back to full function, they will want to include those in. I think of, restaurants is the one that we all think of because they were, or travel severely impacted. There's some questions around the coverage period. Can you prepay, say, rent? So let's say my coverage period ends. Let's say we had a clean loan, started in June 1st and it ends, I don't know what 24 weeks would be. That's 6 months. It ends in December. Could I prepay January's rent and get forgiveness for that? Jason?
It's my understanding, no, that you cannot prepay those items.
Megan, you're shaking your head as well. Okay. And that was a little bit confusing a few weeks ago. There's a lot. Oh.
Can we expand on that really quickly though? Because I've heard a lot of questions around, what if I was back paying some rent? Could I back pay rent? And the answer is yes, you can. So if you pay it during the period, you're allowed to account it unless it's a prepaid. And let's say, December 1st is your cutoff and you don't pay December's or you don't pay November's rent until December 15th, then can you include that? And the answer is yes, you can accrue that extra month or whatever portion you haven't paid, you can accrue it as long as it does prove to get paid as on the next cycle, but no prepay.
And you mentioned, I'm just going to reiterate this, if you have a mortgage, not rent, it is only for interest. Here's some good ones. Let's talk about the non-rent, non-payroll expenses. That would include things like utilities and utilities. What is our understanding on what constitutes a utility?
Telephone, internet, water, sewer, power, gas. That's my understanding. And apparently the utility agreement had to be in place on February 15th. That is another one of those things where seems like it would be very difficult to verify that exactly, or what exactly is a utility agreement. If you're adding a cell phone line for a new employee or adding a cell phone for an employee or a new fixed phone line for an employee or whatever. I don't know, that I guess it's a little gray there, but yeah, it's my understanding it's phone, internet, and then all of the regular utilities as well.
Let me throw some curveballs here. Here's some curveballs that came in from before our meeting. Business liability insurance policies, do they count?
They're not specifically stated, so I do not believe they do.
Votes no. Jason? We'll kind of do a...
Yeah, I agree. I don't think that I would say no.
Okay, I'm gonna throw some more curveballs. You guys can give me your votes. One I've heard, we've got a lot of SaaS companies here in Utah. Does my Amazon Web Services count? Could you apply that as a utility? What are your guys' thoughts?
I would vote no. If you're desperate to find some costs, maybe try to throw it in there, but I would say that is not a utility.
Yeah, I would agree. What they're going for is, can you keep your people working? Can you stay where you are and not get evicted, right? And so that's why they're trying to keep your power on, and utilities are supposed to be tied to your assets like your buildings and your equipment and your things you need to run your business. I agree. If you are desperate, maybe a bank will allow for that, but it's not likely.
There's the ambiguous transportation is also a category, and I have not seen a lot of clarification on what is transportation. So let's just kind of give us our opinions. And again, these are opinions. And I think what I'm hearing is if you need a stretch, go ahead and throw it in. But we don't know in certain cases. But here's some good ones. A business this is a good one. There's a couple good ones. Car leases, forgiven, yes or no? What are your thoughts?
I think yes, actually. Yeah. If it's
I think so.
real or personal property, it says it is available or able to be forgiven.
Gas for my business vehicle.
I think it falls under the same category. If you're, from a tax perspective, that would be deductible as long as you're not taking the mileage deduction on your car. So I would say that's a transportation cost. If it's, I don't know if they're going to apply the tax law where it's outside, it has to be outside of your regular commute. I don't know what they're going to do there, but I would say as much as a car lease is a transportation cost, the fuel is. So I would say yes.
Yeah, the car lease doesn't fall under transportation though. The car lease is actually under the lease area. And so the transportation costs, I do think like fuel and equipment counts. And so to keep your equipment running, I think fuel would be good there. So, but it's probably up in the air on gas for your vehicle. Another one of those, throw it in and try to get your bank to allow for it. But if you can leave it out, don't muddy the waters with it if you don't have to.
Yeah, it seems like where basically all of these loans were approved on, because at the time of approval, it was basically just payroll costs that everyone really applied for, right? And so I think the situation is going to be pretty rare where you're scrambling to try to find these costs, especially with the 24 weeks, because you were approved based on payroll. And unless you really have had to lay off half of your force and not able to bring them back by December 31st, then you really shouldn't have to scramble for all of these costs. That doesn't, we still need to answer the questions, but you shouldn't have to throw in a lot of these costs based on what you were approved for. So
another kind of good curveball. My business has a lot of flight expenses. Would that count as transportation?
I don't believe that they're trying to get those travel costs involved. I think that transportation is more of a utility, not a travel expense.
Yeah, I would agree with that.
Yeah, and as I think about, what you guys just said, the purpose of this program was to keep people employed or keep businesses alive so that they could employ people. So sort of those extreme examples where you had to shut down, the non-payroll costs, if you look those are the things that are trying to keep a business going, the rent, the utilities, so that you could come back to business. If I look at the spirit and the interpretation of it. And I think those are the situations for a lot of businesses that have been able to adapt, the knowledge worker type businesses in particular, the payroll costs are going to be good. For those others, the reduction in the payroll cost limit gives more flexibility to use those funds. My guidance to my clients was and continues to be, don't do unnatural things with the money, just to pursue forgiveness. Do what you need to do to stay in business. And I think, Megan, you brought it up, like, we don't know what's going to happen in a month or two. And so even if I had a customer said, hey, should I pay bonuses? And I said, no. I said, don't chase the 8 week. I said, pay what makes sense for you to run your business right now and stretch out your cash as much as you can, because we just don't know what's around the corner. All right, just a couple of general questions and then we'll wrap up. this kind of comes to what I said. This is more general guidance. I'd like to see if you guys feel differently, but like there was a question that was like, hey, my industry was basically shut down. I don't know if they're in travel or hospitality. They had to lay off everybody but a few like owners and a couple core employees, and they're using this income to pay nothing but company related bills. What do we suggest we do? What would you recommend? I kind of gave my thoughts. Jason, how would you build on what I said in that situation where like, hey, I'm not going to be able to achieve forgiveness? What would you tell a company in that situation?
Yeah, I mean, as we've alluded to a lot, you have until December 31st, which is great, you know. So, I mean, I think you're right on when you say don't do anything unnatural, because hopefully you're going to have enough time to cover those costs with wages by bringing your employees back. If you don't, I mean, I would hang on to the money, assuming that you're going to have to pay it back, you know, or look at it as a 5-year loan at this point, you know. If you're like, hey, I'm not going to get forgiveness, but I just got a 5-year loan with pretty decent terms. You know, I mean, if you are pretty certain you're not going to be able to use it how you're supposed to, I would kind of just plan on having to pay it back at some point.
Yeah, you won't have to pay anything back right away, right? And a 1% loan, I mean, you can't beat that, period. So, I mean, except for forgiveness, I guess. But yeah, I think you just approach it as, you know, if I get, I'll get forgiven what I can, because I do have a few employees, and hopefully we can achieve some level of forgiveness with the allowable costs. But whatever you don't, then you have a really favorable terms loan and plan on paying it back in the next 5 years.
Final question I want to address, and I think this might look a little bit jaded, but I in all honesty, you know, we'll try and give our unbiased opinion, even though we're biased. Somebody has a lot of questions. They're struggling with the forgiveness application. What would you recommend? What should they do? Where should they go to get help? Megan.
Well, I mean, I'm shamelessly say call us. I mean, we really have a team dedicated to this. We're not the only ones, you know, but look around, Google, find somebody to help you out. There are going to be some banks that kind of have a hands-off approach and say, you've got to bring us a completed application. We're not helping you fill it out. Other banks are going to do more hand-holding, and they're going to ask for little pieces, and they're going to basically build the application form themselves. So it's going to depend on your lender, and it's going to depend on you. But yeah, get help. I mean, we're here to help. We'd love to help.
Jason, your thoughts? Should somebody hire? Again, we are biased. Should somebody hire an accountant to help them with the forgiveness?
Yeah, a lot of the smaller banks that I've talked with are very willing to help out with the forgiveness application as well. You know, I mean, obviously we would love people to come to us and increase our business, but maybe try your bank first, because we also, you know, accountants are going to be absolutely inundated right now, especially with the tax deadline being moved, you know, September and October tax deadlines. Accountants are going to be inundated. They're going to be happy to help also, but try your bank. You know, if you have a banker that you've worked with closely, the banks are incentivized to get these loans off of their balance sheet because they're not good loans for the bank. And so see if they'll help you out. You know, I mean, I was on a conference call with a client and their bank a couple days ago, and the bank said, hey, I will send over a filled out forgiveness application to you. Just sign it. Make sure it checks out and sign it and send me the supporting documentation. I think a lot of banks are going to be willing to do that. You know, they want to help out as much as possible. So try your bank. If you're with a bigger bank or fintech or something, it's likely you're not going to be able to get somebody that's going to give you that personal touch. But if you're with a smaller to medium-sized bank, Zions is great. You know, we've used them a lot. Reach out to whoever helped you fill out the application and see if they'll help you fill this one out. If that doesn't work, yeah, I would definitely recommend getting someone who knows what they're doing, because By the time you put in several hours, maybe it gets rejected, you have to do it again. I mean, it's going to be worth paying someone who knows what they're doing to just get it done right the first time. So.
Yeah, and my thoughts are, again, we are biased, but I look at this as, it's hard to compare it to a tax return, but it's like a mini tax return. And nobody thinks about doing their own business taxes. I literally don't know of a single business that does their own taxes. You've got real money on the line. And I would expect, like, I know that any customer that I support with forgiveness, I'm going to fight with the bank on everything I submit. So I'm going to back them up, just like as if I were to do a tax return. I'm going to fight to defend that calculation. And it's not a trivial amount of time to Jason's amount. So you have to think about this. I think the complexity is many orders of magnitude higher than the loan application. So go into that with that thought. Obviously, the simpler your situation, if you can use the easy form, you're probably going to be okay doing it yourself. But you have a lot of employees, a lot of complex scenarios. Those a lot, maybe some of those calculations you've got to deal with. You're going to want to. You should consider using somebody who's got some good expertise that could be your advocate and fight with your financial institution, or heaven forbid, the SBA should your loan be reviewed. But yeah, we are at the bottom of our time. I think we got through a lot. I'd like to thank Jason and Megan for their expert insights, and thank everybody who attended. And with that, we'll wrap things up.